Alright, so to qualify as a business owner, you really don't need to be a big corporation. You just need to start a muse, like we discussed in a previous video, or a part-time business. It's just as simple as that. But first, let's take a look at the differences between an employee and a business owner, and I'll just illustrate a real quick point so you can see the difference. All else being equal, let's say the employee and the business owner both earn $1,000. Now the employee has to pay taxes out of that $1,000 immediately, which will leave him or her $600 to spend on bills. Now the business owner gets to pay their bills first before they're taxed. So in this example, the employee has $670 since they paid the taxes already, and the business owner has $1,000. So I'm going to illustrate a really simple example, or a quick example, with just a few figures. So we have $670 for the employee, $1,000 for the business owner. Let's talk about a car payment for $220, insurance for $80, gas for $130, cell phone service $110, and 4 lunches for the month for $60. Now again, obviously that's not all the bills that you as an employee or the business owner have, but this is just so I can simplify this example. So what do we have left? We have $70 left for the employee and $400 for the business owner. Now obviously the business owner has not paid their taxes yet, so since he or she is going to pay taxes on $400, a lot less than $1,000, he or she would probably be in a lesser of a tax bracket. So in this case 28%. The employee has already paid the taxes up front, and the business owner is paying the taxes on the $400 for $112, for a total of leftover the employee $70 and the business owner $288. Now that's a huge difference. So in summary, the total expenses were $600 for both the employee and the business owner. After the taxes, total of $70 to the employee, $288 to the business owner. Now that's a difference of over 392% that the business owner got to keep in his pocket legally. Alright, so what is all else being equal? Okay, let's take the example of the employee and the business owner each earn $50,000 a year. So that last example was on $1,000. So if you multiply that times 50, you'll see that the employee has about $3,500 left over at the end of the year to enjoy their lifestyle, and the business owner has a whopping $14,400. Now without really doing the math, I would rather be in the $14,000 category. Now that affords you a lot more nicer things or a better lifestyle. So what exactly is the formula here? So the formula is the employee and the business owner, number one, earns. They both earn the same. Number two is the biggest difference. The employee gets to pay taxes first, while the business owner pays their bills. And number three, obviously the employee pays the bills with whatever is left over after being taxed, and the business owner pays their bills first and then are taxed on whatever is left over. So all in all, I would rather be in that box right there, earning a lot more dollars and having a better lifestyle, paying a lot less to the IRS. Now, a lot of people say business, it's hard to get into, it's hard to start. What do you start? What's the right business? It doesn't matter, just get something started. Get going now. It doesn't matter if you're going to be a big business at some point, or if it's just a part-time business, something you do on the side. Just get started, and you get to keep a lot more of your hard-earned dollars rather than giving it to the IRS. Plus, it's a lot more fun.